Entering a new year means it's time for a housing market update. Today, we are going to look back at 2022 and then look ahead to 2023. I'm Bethany Warnches, real estate agent with Addison Jones, and you are watching Tuesday Talks with Bethany, where I answer real estate FAQs. And today's FAQ is what is going on in the housing market. So let's again start by looking back at 2022. So every year I take time to watch a economic forecast that's put on by the National Association of Realtors. It's about 2 hours long, and I just compile some data from that and share the highlights with you. So it was definitely a slowdown in the housing market in 2022. So nationally, sales declined monthly in 2022. In fact, from a year ago, sales are down about 30%. And what they said is that the year of selling was comparable to the 2013-2014 market and the amount of sales that occurred. And again, this is national, not locally specific, but it is national. But one big thing to note is even though there was this slowdown, prices were still up about 4 to 5% compared to a year ago. And again, this came out like mid-December. So even though we see this recession, this slowdown, prices have still increased. It's not like there was this drastic bombing of pricing. So what are the good things that are going for the market right now that this crash is still not expected to occur? So we know that we have the strong job market where it's still where companies are hiring and they're looking for work. There is more equity in homes because homes, again, are worth so much more today. Lots of equity to take advantage of. The loans that have gone out to buyers have gone out to qualified buyers. And so they're less likely to default because they are more qualified buyers getting those loans. And that, again, was a huge part of the 2008 crash, was banks loaning to buyers that they shouldn't have. What's also important to note is that the Midwest is one of the most stable parts of the country. So if you are on the coast or in the South, you might see more drastic changes in pricing where they may go up a lot more or come down a lot quicker. But here we just see more stability and not as much of that up and down movement. And so it's expected that it will be more stable than a drastic decrease. Now, what's important to also note is inventory. That inventory shortage continues. It's been going on for a while, and we're not really going to be seeing that going away anytime soon. We might see a little more, but it's not going to be this drastic flood. And why is that? Why does this inventory shortage exist? Well, first of all, really through the rest of this decade, the 2020s, the Millenials, which are the biggest generation, are buying their first homes. They're getting into the game. And so there is a lot of them that need to buy. There also is many baby boomers who are still holding on to their houses and not selling. And so with the baby boomers holding on to the houses and not much coming available for the millennials, especially in that first-time home buyer range, that creates a shortage. Now, more people are also going to be staying put because rates aren't at that 2 and 3% anymore. So some people think, why would I sell and go get a mortgage for twice as much? So some people are staying put for that reason, or just because some of that uncertainty in the economy and in the world that people just feel more safe staying put right now. And so that creates a shortage of inventory problem as well, because not as much is moving and coming to the market. And finally, builders, have pulled back. And so although we need houses to be built, there's less houses being built, which does not help our inventory shortage problem. So those are just different reasons that as we go into 2023, we are still going to see an inventory shortage. Again, it's where we may see more come to market, but not like the drastic flood of foreclosures or something like that. Now, when I listen to these economists talk on the panel, the majority of them predicted for 2023 that rates are gonna be in that 5 to 6%. And at the end of 2022, we saw the rates start to come back down. And that's where their predictions are. But I don't want to discount this one economist that was talking, because I think he also brought something to light. And he talked about how right now we've seen our gas prices come down from that craziness that we saw earlier in 2022. And what he was saying is that we have tapped into these reserves, and we're using those to really artificially bring that down. And once we're not tapping into that anymore, then it could just go back up. And so he said it was more of this artificial hope of gas prices coming down because we were tapping into the reserves. And he thought that inflation was going to stay high and that he could see interest rates going to 8 to 10%. And I just wanted to share that too, because I think it's important to take into account different perspectives as well. So on one hand, we've got the majority of economists talking about the 5 to 6%. And then we have him looking at some other factors and how he can see it raising up higher. So it's not completely certain what exactly is going to happen, but it gives you some different perspectives of what economists are seeing and thinking. Now, I wanted to look back at 2022 locally as well. So if you follow my Facebook or my Instagram page, you know that monthly I do stats for the city of Fond du Lac. And yes, I serve other areas, but Fond du Lac is my home base, and that's just why I continue to look at that data month after month. So if we take a look back at 2022, let's look at some of the trends that occurred. Now, I didn't pull December's data yet, and I'm going to be doing that later this week. And the reason I didn't do that yet is I just want to make sure that people are, back to work today and all the data is finally being inputted, and that I make sure I have all of it before I do it. So it's really the past 11 months, but that still gives us ideas of trends. So let's talk about number of houses sold in 2022 in the city of Fond du Lac. So from January to March of 2022, we were seeing in the 20s and in the 30s for amount of homes sold each month. Then when we got to April through September, that picked up and we were seeing in the 40s and the 50s for amount of homes sold. And then in October and November, we were back to seeing houses being sold in the 30s per that month. So, yes, there was the downtick with rates, but there was also the downtick seasonally as well. Then the median sale price for 2022 for the city of Fond du Lac. So January and February, I saw it in about the 140s. And then March through May, it was in the 160s, and in July again, it was in the 160s. June, August, and September, the median was in the 180s. October, it was pushed up to 200, but a lot of higher priced homes had sold that month. That really pulled it up. And then by November, it was 175. So we saw it climb from the 140s at the start of the year, and then really ending the year in the 170s. So it does look like that median home price did increase over the year. Now, again, when you're looking at median home price, there are a lot of factors as well. When I do that each month, it depends on how many houses sell at what price point to come to what that middle number is. The reason I look at that median home price is because when you look to move to a city and look at affordability, it's like, okay, what is that middle of the road price? Is it 300,000 or is it, like this case, around 140 to 170? So it just helps people narrow in more on affordability, which is why I track it. Then I took a look at what sold at or above list price, and I did this in a percentage. Now, I didn't start tracking this at the beginning of last year. I really started tracking it in May. So in May and June, 90% of the houses that sold at or above list price. And then in July and August, it was in the 80s. The 80 percentages for homes that sold at or above list price. And then in September, October, and November, it was in the 70 percentile, whatever, in there that sold at asking or above. And so that is a downward trend that we see as the year went on, that there was less houses that were selling at or above asking. And that's something that I'm going to say that I expect to see continuing, that will probably continue to come down. Once I started noticing more so that these price reductions were really starting to happen, I started tracking another stat. And that was, of the houses that sold in a certain month, how many of them did a price reduction or more price reductions, at least one or more price reductions while they were on the market. And so in September and October, of those houses sold, it was about 25% of them. And in November, it was about 20%. And again, I have to look at December data yet. But that's really about a fifth to a quarter of the houses taking a price reduction. And so it's when you go on the market, it's thinking, okay, this chunk of houses, about 25% of them are taking a price reduction. So maybe I am going to be in that 25%. And it's also, looking at the trend, because this data is backwards. So it's, could it maybe be upticking a little bit? And as we compile more months of it, then I can kind of see more of a trend. But right now, it was around that quarter percent at the end of the year. Then I also tracked median days on market throughout the year. In January and February of 2022, it was in the 50s. So that's also that seasonal time of winter where things seem to hang on longer. Even though the market was pretty hot at that point in time, we were in the 50s for days on market. In March, it was about the 40s. In April through July, things were moving. We were in the 30s. It was quick. And then August through November, it was mid 30s to low 40s. So again, you're not really seeing these crazy drastic changes. And some of this is also that seasonal fluctuation, but nothing show-stopping, I guess, at least locally here. Then I wanted to look at amount of inventory. So I always do a stat on active with offers. So properties on the market that have accepted offers. And so that's properties under contract. So in January and February of 2022, there was 40-something houses under contract in those months. And then March to June, It was in the 50s and 60s for properties under contract. July jumped all the way up to 78 properties under contract. August and September, we pulled back down to the 50s, and then October, November in the 40s. And so again, you see that seasonal flux there. And then last of all, active no offer. So this is properties that are on the market. They are not under contract. They are just sitting there. So if we look at 2022 and we look at January, it was in the 30s. So about 30 something houses sitting there. And then February through June, that was when we saw, more of an inventory drop. It was in the 20s or less. We saw that pretty big inventory shortage at that time. Then July was in the low 30s again. August dropped down to the 20s. And then September through November, we saw upper 30s to the 40s. So we did see more inventory coming, but again, we see more seasonal uptick as well. But there was more impacting with the rates going up at that time as well. But still, you look at January of 2022 and you see that there was 30 something houses on the market. And then that's about, September to November, where we are again, maybe a little bit more. So it will be interesting to see when I pull my data for December as well, where that landed for the end of the year. So I just want to do a quick recap. I know this video is long, for the housing market in general, as well as locally. So 2022, the market did a slowdown, but it didn't do a scary slowdown. And in fact, I feel like this is more of a good slowdown per se. I'm more hopeful that we get more evening out there in the market, and that sellers still, some of them may still get over asking, some of them get close to asking, some of them may sell under, but that buyers have more of a chance this time around in 2023 because of that slowdown. But if rates are at that 5 to 6%, that is comfortable. That will be good. If the rates do skyrocket up to more of that 8 to 10%, we are going to then see more of an impact. But if we're around that 5 to 6, I think things will still keep moving pretty well on both the selling and the buying side. So it's keeping an eye on that and where it goes. And then overall trends for our local market, it's seen where the median sale price, did continue to rise, and that when it comes to selling or buying, the amount of houses that are going to sell at or above asking is on a downward trend. Not drastic, but it is. Inventory, although there is more, it's not necessarily drastically more. And price reductions are happening to about a quarter of houses, and we'll kind of see where that goes. And days on market are still pretty healthy. That's, a month to 2 months is still pretty strong. So hopefully this was helpful to you, and gave you an overall idea nationally of the housing market and what's going on, and why you can feel lucky that you live in the Midwest in a more stable area. And then that this also gave you an idea of what's going on locally here in the city of Fond du Lac. So thanks for watching, and I will see you next time.